So, are we headed towards a normal market? Looks like it. Hey, this is Beth Helvey with Couture Real Estate. I hope you're doing good today. So, the October stats are in, and it looks like we're seeing some leanings towards normalcy, at least for us. So, closed sales are down, but don't let that discourage you because don't forget that this time last year, closed sales were at a high point that we'd never seen before. So the closed sales we're seeing are more in line with a normal market, which was 2018 and 2019 for us pre-pandemic. So that is also good news. Homes are selling in average at about 96% of the asking price, which again is normal for us, 96% or higher. And we're also seeing the days to contract increasing. They're around 22 days to 28 days is what we're seeing on average. Again, that's more normal for us. It's not the crazy days that we saw this time last year or even earlier this year. So we have over 2 months of inventory in every single market with the exception of Sarasota condos. That's also normal. Sarasota condos tend to sell quicker than any other market, than single family homes in Sarasota or Manatee, and they tend to sell quicker than Manatee condos. It's just the way it is, and it's always been that way. We're also seeing that we're getting back to the pre-pandemic levels of everything with the exception of pricing. And I know everybody's hoping or waiting, or I'm not even sure, for a crash, but we're still seeing an increase in pricing. What we are seeing, however, is that the year-to-year or month-to-month increase in pricing is slowing down. It's not those gargantuan numbers we saw last year or at the beginning of this year. It's more of a normal year-over-year, month-over-month increase that we expect to see. Are the prices going to come down? Well, we haven't seen that yet. We've even got increased interest rates, although they did come down a little bit last week to around 6.5 to 6.75. That should have brought down some of our pricing, but it really hasn't. What we are seeing, though, is more markdowns. We are seeing properties go on the market for more reasonable amounts, and we are seeing properties get marked down within a couple weeks. We're not seeing as many properties go on the market and then get gobbled up and then get sold for way over asking price. We're not seeing that as much. There are always a few exceptions, but we're not seeing it that much. Since the interest rates have come down, that has helped some. And of course, the powers that be, our economists, our mortgage lenders, everything like that, they're all saying that they're expecting to see another interest rate decrease towards the end of next quarter, which is Q1 for 2023. They're expecting to see things in the 5s, some are even seeing 4s, but I'm going to be conservative and say in the 5s. What does this mean for you? Well, if you're buying for a loan, if you're using a loan to buy a property with, what you might want to consider is doing a buy down, which is something that the seller can help you do. The Fed is looking at, or Fannie and Freddie are looking at allowing the buyers to do this, but right now the seller has to help you, and there's a way to do it. What it does is it allows you to go into your house at a lower interest rate than it currently is. You pay that interest rate for a while, and then when the rates come down, you would then refinance. As I've told you all before, I'm actually house hunting myself, and that will be my plan. I will do the buy down, and then at the end of next quarter or beginning of Q2, when those rates stabilize and we see better rates than we have seen, I will refinance my whatever I find. And that is an option for people who are trying to get into a house and have found that they're priced out of perhaps where they want to be or what they need for their family. This allows them to get in. So if you have any questions about that, let me know, and I can put you in touch with a lender or myself that can explain it to you. So what else are we seeing? We're seeing a lot of activity. October was busy, but don't forget we had Hurricane Ian at the end of September, and that really slowed things down. Part of the increase in sales that we saw in October was likely some pushback from September. So I think a lot of the sales that happened or were supposed to happen at the end of September probably got pushed to October, which is part of it. So I think November, the month we're currently in, will be a really good indicator of what we're going to look at for the upcoming season. Now, as far as season goes, we are full. We are busy. We haven't hit high season yet. Don't forget, our high season is January, February, March. We're still in pre-season, or the beginnings of season, if you will. But we are seeing an increase in our winter residents. We're seeing an increase in traffic. Restaurants are busier. Popular tourist destinations are busier. The beach is busier. Everything's busier. That all is an indicator that we should have a normal housing market for the season. So it looks like we're heading towards a little bit more normalcy, which is good for so many people. Yes, sellers, it might take you a little bit longer to sell your house, but buyers, you're not going to have to compete with everybody. And a lot of buyers, now that they've gotten over, basically their PTSD with trying to make an offer a year ago, they're entering the market again. So they're out there. Sellers, it's always the same. When you put your house on the market, price it right. Make sure it's clean, make sure it's staged, make sure you have professional photography. Buyers, before you go out looking, make sure you've got your proof of funds ready to go or your pre-approval, because we are still seeing a few multiple offers in certain areas and in certain price points. So this is Beth Helvey with Couture Real Estate. I hope you're doing good today. If you have the opportunity to get out there and enjoy some sunshine, I encourage you to do so. Wear your sunscreen, drink a lot of water, and we'll talk to you later. Bye now.